Welcome to another episode of the Capital Playbook. My name is Charles Williams. I am the owner and managing member of Pioneer Realty Capital, and we're so excited that you're with us today. We have a good friend of ours, a friend of the show, Mr. Charles Jones. He's been with us before on our previous podcast show. He's back to talk to us about some financing and some financing programs that he and his company represents. But before we get into our discussion today, we have that same old usual housekeeping, and that involves me asking you to do me a favor, and that is to register or to subscribe, rather, on our podcast channel. It allows us to continue to attract really good guests like Mr. Jones and have this content that we can share with you. Be sure and hit the bell when you subscribe so that you know that there's another podcast that's going to be airing soon. And then share this with the folks. Share it on your social media. Share it on your YouTube. This is great information you won't normally get about the commercial real estate business. So make sure you share it, and do the same if you're listening on Apple or Spotify. So with that out of the way, with that being said, let's get on with our show and welcome Mr. Charles Jones with M&T Realty Capital.
You got it.
Did I get it? All right, perfect.
Got it.
I practiced a long time. So Mr. Jones, Charles, tell us a little bit about your background. Now, you've been in the commercial mortgage banking field for probably 20 years or so, right?
25 years.
Wow.
Yeah, it's been a long time. But first, I would like to thank you and Pioneer Realty Capital for having me back. It's great to be in your presence. It's great to be back on your podcast, and I look forward to it every time you extend the offer for me to come on. So definitely thank you.
Well, we're excited to have you. You always give us such good information. You know, a lot of people are really interested in commercial mortgage banking and that journey, because when people look at us, me and Mr. Jones, I've been in the business just about 20 years. Mr. Jones been in the business about 25 years. That is a question that inevitably comes up. How did your journey start? How did you go from the beginning to where you are now? You're well established in your career, and it's good information because we want to help folks to make that same journey. So with that being said, you went to Northwestern University. You got an MBA at the same school?
Yes. So I went to Northwestern University, graduated in 1994 with the undergraduate degree in industrial engineering. I worked in the banking world for a little while, where I got my first taste of commercial real estate. And I went back to Kellogg, Northwestern's business school, and graduated with an MBA in 2001.
Okay.
So,
yeah.
And from there, I just continued. I was working with Bank One, now JP Morgan Chase at the time, in their real estate department. And in 2001, moved to Southern California to do some construction lending. And I've done every aspect of lending within real estate for the last 25 years, especially real estate finance. I even worked for a developer, worked for Fannie Mae, and have been in the commercial mortgage brokerage business since 2015.
Okay, well, very good. Now, have you noticed any changes in the industry since you started? And if so, what are some of the major changes you've seen from in the commercial mortgage banking industry?
Well, I think the biggest change that I've seen is the flow of information is a lot quicker, a lot faster than it used to be.
Right.
And with the number of deals or activity that's going on in the billions of dollars that's getting financed, that's great. And so technology has been great for real estate. Technology will continue to be great for real estate moving forward. And I think that's the biggest change because, I worked on a deal toward the end of this year, had to close by the end of the year. I didn't sign it up until November 23rd and was able to close by December 28th. And that's something that you really can do, let's say, 10, 15, 20 years ago, because the flow of information, the fluidity of getting appraisals and the reports that you can get now and how fast you can get them. So, which has really helped out the real estate industry.
Wow. Yeah. And it is amazing to see how things have changed. What do you think as you look at the commercial real estate, especially as it relates to mortgage banking? What do you see in terms of the future and how we're going to leverage technology? What changes do you think are coming?
Well, I think some of the changes that are coming involves or evolves around how we receive information.
Mm-hmm.
And so you're seeing a lot of platforms that are now, so sometimes we'll get Excel spreadsheets and we have to manually input information.
Mm-hmm.
But there's a lot of technology that's coming out where you can submit your financials and it'll automatically categorize the financials and almost analyze the information that you send
Wow.
in. So you're seeing that type of technology, which will further speed up the process or provide quicker response time and quicker access to information.
Right.
And so that's going to actually help speed up the commercial real estate or commercial mortgage industry. And I think you'll see some type of, you see the Bitcoin, you may see some type of cryptization of commercial real estate where you can buy let's say a stock or cryptocurrency in a mortgage or as an investment later on down the line. There's technology that's coming along those lines as well.
Right. So now you're with M&T Commercial Realty, and you guys have just made this I guess joint venture with Marcus and Millichap.
Correct.
How does that position you guys in the marketplace? This thing has come together. What advantage do you see to y'all's business by making this joint venture?
Well, so in our business, we're a agency, Fannie Freddie lender. So we have our Fannie license, we have our Freddie license. And so a lot of our competitors, let's say such as a CBRE or Colliers or Newmark. So what they've been able to do is they've been able to have this debt platform, and then they've been able to align themselves with these investment sales platforms so they have deals that are feeding into their debt platform.
Right.
And so this alliance or strategic alliance with Marcus and Millichap will allow us to do that. So we're
compete on that level.
So we have Marcus and Millichap Capital Corporation, which is their commercial mortgage arm, and they get a lot of their business from their investment sales guys, which also includes institutional property advisors. And so what this allows us to do is to have access and be on a level playing field with them, and not have to go out and buy some type of real estate investment sales platform. So,
that makes a lot of sense.
So they have the platform in place. We provide the debt, and I think it's a win-win for both companies.
Yeah. So in merging all that together, there's a lot of data that's having to flow through. How do you think? And going back to my technology question, how do you think you guys are leveraging technology to allow you to affect this merger and to the point where you create a synergy where you're now able to compete with some of these other firms?
Right. Well, this has been in the process the deal was finalized in October 2021, but actually the process started 2 years before that.
Oh, wow.
And so part of that process was trying to figure out the systems that go into place, trying to figure out the technology, trying to figure out how people get paid and making sure that it's equitable to everyone involved.
Right.
And so now that we're at this point, we have systems in place, we have technology in place where we can now communicate with each other effectively. And it's all about being on the same page, because we want to make sure that the packages or the loan packages that we receive from them is on information or on a system that we're familiar with, so we can analyze it quickly and come to a decision and get back to them as quickly as possible.
Okay. Yeah.
So it's been a challenge, and part of that challenge is getting those systems in place. And we finally are there, but there's still some work to be done. But we're probably 90% there.
Yeah, seems like to me that the group that has a better hold of technology, who's leveraging technology the best, they're probably going to be the ones that win. And do you feel what's your thought on that?
I agree. I mean, I think we can't deny technology. We're living in society where we want information fast. We want to be able to do things faster. We want to be able to process things faster. And I think there's a lot of technology out there because I get presented, I would say at least 6 to 10 times a year with firms that say, hey, we can process your data faster. We can do this and we can do that to help you process your data faster. And so what's important is that, one, the quality of what they're getting, what we're getting is good, and also the accuracy is of utmost importance. And we have to also make sure that, hey, Big Brother, Fannie and Freddie, that they're okay with it.
That they're in line with it, yeah. Makes a lot of sense. But I'll tell you what, now, no doubt, because I know you're experienced in the industry and you see some specific strategic advantages that perhaps M&T Realty Capital with its alliance has over your competition. If you were talking to a client, what would you point out as your primary value proposition point when winning that business?
Well, I would just our experience and our depth of financing sources. I mentioned earlier we have a agency license, so we can do Fannie and Freddie, but we can also do HUD. We can do CMBS. We can do life insurance. We have relationships with debt funds. So for a specific asset, let's say multifamily, we have a number of lending sources for that. And as Fannie and Freddie look more toward mission-driven or more affordable business, it becomes a little bit harder to finance a deal with Fannie and Freddie, let's say if it's a Class A multifamily.
Right.
So you need other lending sources in order to finance that. And we have those. I mean, we actually own an insurance company, and we're looking to expand our real estate capital business as well. And so our CEO, Michael Berman, has been great about doing that. And we have some things that we're working on in the near term that will help us expand our reach in terms of providing real estate capital in the marketplace.
Yeah. I know when you had mentioned you were going to go over to M&T and we were talking about those value points, what really stood out to me is that even though you guys are direct lenders, you have your own source of capital, your institutional lenders. As you mentioned, you have the insurance company. You also kind of play that correspondent role where you leverage your relationship with other institutional lenders in the market, where you can bring, really your role. You're really coming in as an advisor with your own source of capital.
Absolutely.
And you're helping that client understand what is the value of these various sources, and you're able to present something that just doesn't cater to your loan product, but what caters to the client.
Absolutely. And that's a great point, because I talk a lot about with my clients clearing the market. And what I mean by clearing the market, well, if you bring me a deal, multifamily, industrial, self-storage, what I can do is I can go out and let you know what all the opportunities are in the marketplace. So you as a client can make the best decision for you. And that's really sometimes unheard of. I mean, you can go to a commercial mortgage brokerage shop that could do that, and they would call me to say, hey, Charles, what would you lend on that? But me as a direct lender and as a commercial mortgage brokerage shop, we can clear the market with one fellow swoop, so you don't have to go to multiple different places to clear the market.
And you have more reliable information. And what a lot of people don't understand, now, I mean, trust me, I'm in that broker correspondent space. So technically you're kind of competition to me, but we like you anyway.
Well, I mean, but I come to you to clear the market.
You come to me to clear the market in a lot of cases, because we have sources that's true. Good point. But what a lot of people don't understand is sometimes when not all correspondents or brokers or even direct relationships are cut from the same cloth. Depending on the quality of the relationship that intermediary has, he may just get a soft quote that's just very general, very broad, could be priced way too low than what's realistic, could be priced higher than what the market is offering that debt or equity at the time. You don't have that real solid information. Whereas with you, because of the nature of the relationships you have with your lending sources, when you quote a deal, it's pretty close to accurate. Would that be a fair assessment?
Absolutely, and that's one thing that we pride ourselves on, as well as being able to have those relationships where we can give our clients a firm quote, and it's not, well, if this happens, then maybe we can get you this, or if that happens, but we have relationships where we can call and say, hey, here are the metrics of the deal, or here's what we're looking at, and give them a pretty firm quote.
Right.
From the jump.
Yeah, and that if you're in business, if you're in commercial real estate, understanding what your debt looks like, understanding what your equity looks like, how to properly construct that capital stack, because you hear us say all the time, it's not all about interest rate. Yeah, there are a lot of people who've gotten in a lot of trouble on their assets because they're chasing interest rate, and they end up doing some really bad things to themselves, like trapping their equity or over putting too much equity into a deal,
just paying. They need to refinance or they need to sell and paying these outrageous yield maintenance or prepayment penalties.
Right.
So, just because they initially got 10 to 15 bips lower in rate, but it costs them 20, 30 bips in the long run. So,
yeah, and it's crazy. People surrendering millions of dollars. Now, you and I are fairly seasoned in the commercial banking, mortgage banking field, but there are many people who want to transition into commercial mortgage banking or get into that commercial real estate at various levels, especially on the finance side. If someone came to you and they're just starting their journey, what advice would you give them? What would help them? I know there have been some lessons learned as you've come through this over the last 25 years, but what advice would you give someone new coming into the industry?
Well, I would say, there's a plethora of information out there that you can look at on the internet or YouTube or whatever. But I would say join an organization like the NMHC, like we're the event that we're attending in Orlando now. Join the Mortgage Bankers Association, because not only do they have the training tools that you'll need in order to learn the business, but you also want to develop connections with people like you and I, who can, let's say, guide them in a certain direction. Because again, you can look at a bunch of YouTube videos, you can look at a bunch of stuff on the internet, but you really want to align yourself with someone who's in the business, who can be a mentor to you, because there's a lot of things that you can't learn on the internet that person could teach you.
Right.
And so, the numbers are the numbers.
Right.
But as you know, it's the personal relationships you build, understanding the type of asset, understanding the market, understanding your client, because I could be selling something or advising my client on something that they're not looking for.
Right.
So it's important to learn how to listen to what your client is saying and listen to what your client wants.
Right.
And be a good advisor to them, because again, plenty of smart people out there. The numbers are the numbers. There's plenty of ways that you can look at the numbers, but are you doing the right thing for your client, and are you giving them the best advice? And mentoring with someone, getting to know someone is the best way to learn how to do that.
Yeah, absolutely. At the end of the day, this is a people's business, and those relationships matter. One of the things I always talk to people, and you probably have heard me mention on this show quite a bit, is the importance of building a good business reputation and maintaining it, because there are a lot of opportunities to take advantage of situations or people, and you may appear to win in a very short term, but long term, that damaged reputation will follow you.
Absolutely.
Absolutely. And we've seen some pretty good careers go to nothing because they were chasing something and they took advantage of someone, and it just cost them everything.
Absolutely.
Yeah. So I know that you have children, and I don't know if they're going into commercial real estate or not. But what are your thoughts on this business as a career? just in general, if you were looking from the outside in and you were not in the business, but you saw the results, what would your thoughts be about choosing the commercial real estate field as a career?
Right. You know, knowing what I know now,
Mm-hmm.
I would advise my kids to get into the business as quickly as possible. I
Yeah.
mean, because I always liked real estate.
Mm-hmm.
I mean, because you can see it, you can touch it,
Right.
and you can visit it, you can walk around it. So it's like a tangible asset. And so
Right.
if you're the type of person who wants something tangible, likes to build stuff, or likes to create something, real estate is definitely for you.
Right.
And I would say go into it as early as possible because it's a great way to create wealth. Because hey, more people have created wealth via real estate than any other investment. And so learn about it early on. I mean, I would advise my kids, hey, don't spend a whole bunch of money buying your dream house or your first home. Go
Right.
buy a duplex, a triplex, and learn how to manage them because it also teaches you people skills and
Right.
it allows you to create skills to figure out things on your own and not always having somebody figure it out for you. So,
Right.
so I would say, hey, from
Yeah.
the beginning, I would tell them to go into it.
Yeah, it is a good career. Well, I tell you what, Charles, it's always a pleasure having you on our show. I know that you have some great things coming up. You and I talked about some plans you have in the future, and
Absolutely.
I'd love to have you back on our show to talk more about that. But we definitely certainly enjoy having you come and give us some of your insight. So, Mr. Charles Jones, ladies and gentlemen, again, M&T Realty Capital. They just finished this beautiful merger with Marcus and Millichap. If you're in that space, be sure and give him a call. His information is on the screen. This man will take very good care of you. Again, Charles, thank you so much for being on our show.
Oh, thank you for having me. It's always a pleasure.
All right, thank you. So again, this is another episode of the Capital Playbook. Like, share, subscribe, become a member of this family, join this movement. Let's learn how to use this playbook to our advantage. Make sure you subscribe. Make sure you share. Let's build this thing. Let's all win by playing this Capital Playbook.